Ladies and gentlemen, Archivist here. Welcome to the War Room. Today we are shifting our focus from pure analysis to active simulation. We are going to execute a forensic war game of the most dangerous geopolitical event that could potentially manifest in 2026. In our previous dossier, we war-gamed the hidden industrial motive behind a hypothetical U.S. military intervention in Venezuela. We walked you through the chemistry. We explained how a strategic seizure of the Mary 16 heavy crude would be the only feasible way to save the Gulf Coast refineries from a catastrophic heart attack. We informed you that in this scenario, the raid is a desperate attempt to secure the essential fuel for the American engine. But today we must simulate the second objective. In this specific projection, while the 82nd Airborne is busy securing the oil fields in the Orinoco, a separate, smaller team of U.S. Special Forces is moving through the streets of Caracas. They aren't heading for a refinery. They aren't looking for Nicolas Maduro. They are heading for a fortress at the corner of Avenida Urdaneta, the central bank of Venezuela. Because a bankrupt empire doesn't just need oil to run its trucks, it requires high-quality collateral to save its currency. The United States is currently running a $2 trillion deficit every 6 months. The bond market is shaking. The exorbitant privilege is dying. In our war game, the Treasury doesn't just authorize this raid to get the gas flowing. They authorize it to act as repo men. There's only one asset in Venezuela that could be seized, loaded onto a C-17 Globemaster, flown to New York, and monetized within 24 hours to plug the massive hole in the Federal Reserve's balance sheet, gold. Specifically, 161 metric tons of it. While the world is distracted by headlines about restoring democracy and the oil crisis, our scenario assumes the U.S. Treasury is quietly calculating the recovery value of the largest gold hoard in Latin America. And according to data from the Kobe letter, they aren't valuing it at the market price. They're valuing it at $4,300 an ounce. Today, I'm going to walk you through the Caracas Protocol. I'm going to explain why Operation Absolute Resolve would not just be a resource war, it would be a margin call. And I'm going to show you exactly where that 161 tons of gold goes and why it effectively vanishes from the global market starting today. To understand why this scenario is inevitable, you have to look at the timeline. Why invade now? The media would tell you it is about the drugs. They would tell you it is about the migration crisis. That is the cover story. And even our previous analysis, while accurate regarding the oil, was only half the picture. Oil is a future cash flow asset. It takes months to pump, refine, and sell. But the United States government is broke today. They need an asset that is instantly liquid. Venezuela officially holds 161 metric tons of gold in its reserves. That is roughly 5.18 million troy ounces. For the last decade, the regime has played a dangerous game. They have been using this gold to bypass U.S. sanctions. They have been flying it to Turkey, to Iran, and swapping bars for cash to keep the lights on. But in our timeline, intelligence suggests a move that crosses the ultimate red line. The scenario assumes Maduro is preparing to pledge the entire 161-ton stockpile to the BRICS alliance. He is preparing to use it as the seed capital for Venezuela's entry into the new BRICS currency unit. This would have effectively locked that gold inside the Eastern Bloc forever. It would have become a strategic asset of Shanghai, not New York. The United States could not allow that transfer to happen. The raid is an interdiction. It is a move to kick down the door before the wire transfer can clear. Now let's look at the math used in this projection. Why is 161 tons so important? In the grand scheme of global finance, $22 billion seems small. The U.S. prints that much money before breakfast. So why launch a carrier strike group for it? Because physical gold is not the same as digital dollars. Digital dollars are a liability of the Fed. They are debt. They are promises. Physical gold is Tier 1 collateral. It is the only asset on a central bank's balance sheet with zero counterparty risk. When the U.S. bond market is volatile, which it is right now, the Federal Reserve needs real assets to shore up confidence. This is where the Kobe letter data point becomes the key, a valuation of $4,300 per ounce. Stop and look at your screen. Why the discount? Why would the U.S. Treasury value the gold below the market price? Because $4,300 isn't the trading price. It is the collateral floor. It is the price at which the U.S. Treasury, or the IMF, is willing to book that gold onto their balance sheet as a risk-free asset to backstop a loan. This confirms something the archivist has been telling you for months. The official price of gold is irrelevant. The shadow price, the price used by central banks behind closed doors, is heavily calculated. By valuing Venezuela's reserves at $4,300 an ounce, the scenario suggests the U.S. is admitting that gold is the ultimate money. They are willing to spend billions on a military operation to acquire it. You don't spend billions to acquire a pet rock. You spend billions to acquire the base layer of the monetary system. History doesn't repeat, but it rhymes. Look at Libya in 2011. Muammar Gaddafi wasn't killed because he was a tyrant. He was killed because he had 143 tons of gold and a plan to create a pan-African currency backed by that metal. He threatened the dollar's hegemony, so they took the gold. Look at Iraq in 2003. Whatever you think about WMDs, we know for a fact that U.S. troops were trucking gold bars out of Baghdad within weeks of the invasion. Venezuela is simply the latest chapter in the same book. The Caracas Protocol is the standard operating procedure for a dying empire. 1. Identify the asset. Find a nation outside the banking system with a large stockpile of physical metal. 2. Create the pretext. Use human rights, drugs, democracy, or in this case, energy security to justify intervention. 3. Execute the seizure. Send the military to secure the vault. 4. Repatriate the collateral. Move the metal to New York or London for safekeeping. Once that gold enters the cargo hold of a C-17, it leaves the sovereign control of Venezuela. It enters the custodial ledger of the West. It effectively bolsters the US dollar at the expense of the global South. It is a wealth transfer of historic proportions executed under the cover of a stabilization mission. But the most critical aspect of this war game isn't just what the US gains. It is what China loses. We established in the previous video that the Mare 16 oil was essential for US refineries, but for China, the Venezuelan gold was essential for the BRICS currency. China has been aggressively courting Venezuela for this exact reason. By seizing Caracas, the US has denied China a critical piece on the chessboard. They have created a gold blockade around Latin America. This sends a clear message to every other country. If you try to pledge your gold to Beijing, we will come and take it. It is a mafia tactic. Nice gold reserves you have there. It would be a shame if someone liberated them. The raid on Caracas wasn't the end of the war. It was the opening shot of the physical phase. We are moving from currency wars, fighting with interest rates, to kinetic asset forfeiture, fighting with Marines. So in this scenario, the gold is secure. The vault is empty. The repo men have done their job. But now comes the hard part. How do you move 161 tons of gold, which is heavy, traceable, and stamped with Venezuelan hallmarks, into the global market without crashing the price? You can't just sell it on the open market. You need a laundromat. In the next section, I'm going to show you the London loophole. I am going to explain how the Bank of England and the US Treasury use a specific accounting trick called unallocated accounts to turn stolen gold into market liquidity instantly, and why the GLD ETF you own might be about to receive a massive injection of Venezuelan bars. We established that the US military has effectively seized 161 tons of Venezuelan gold. The vault in Caracas is empty. The C-17s have landed. But now the US Treasury faces a massive technical problem. You cannot just sell 161 tons of stolen gold. Physical gold bars are not like Bitcoin. They are not fungible. Every good delivery bar sitting in a central bank vault has a hallmark. It is stamped with a serial number. It is stamped with the year of casting. And most importantly, it is stamped with the refiner's mark. The bars coming out of Caracas are stamped with the logo of the Venezuelan Central Bank, or they are older bars stamped by Swiss refiners on behalf of Venezuela. These bars are radioactive. If the US Treasury tried to sell a single one of these bars on the open market in London or Hong Kong, the alarm bells would ring instantly. Compliance officers would see the serial numbers. They would check the sanctions list. They would say, wait a minute, wait. This bar belongs to the Maduro regime. We cannot touch it. The gold is legally toxic. It is frozen out of the global banking system. So how do you turn 5 million ounces of dirty, sanctioned gold into 22 billion of clean, spendable US dollars in 24 hours? You use the London loophole. You don't sell the metal. You swap the title. To understand the heist, you have to understand the difference between allocated and unallocated accounts. This is the dirty secret of the London Bullion Market Association, LBMA, and the Federal Reserve. Allocated gold. This is how you think it works. You own specific bars. Bar number 1234 and bar 1568 belong to you. They sit on a shelf with your name on it. If you withdraw them, you get those exact bars. Unallocated gold. This is how the banks actually work. You do not own a specific bar. You own a claim on the pool. The bank owes you 400 ounces of fine gold. They don't tell you which bars back that claim. It is just a ledger entry. Here is the laundering protocol that is likely executing right now in our scenario. 1. The deposit. The 161 tons of Venezuelan gold arrives at the vault. It is wheeled into a deep storage cage. It is designated as deep storage or custodial. 2. The absorption. The Fed doesn't sell those specific bars. Instead, they simply add them to their general inventory. 3. The issuance. The Fed then issues unallocated credits to the U.S. Treasury's Exchange Stabilization Fund, ESF. It is a magic trick. The dirty Venezuelan bars sit in the dark, never moving, never being audited by the public. But on the computer screens of J.P. Morgan and Goldman Sachs, 5 million ounces of new gold just appeared in the system. The Treasury can now sell these unallocated credits instantly. The buyer, let's say a bullion bank, doesn't care about the Venezuelan hallmarks because they aren't taking delivery of those specific bars. They are just buying a claim on the pool. The toxic origin of the metal has been scrubbed clean by the ledger of the Federal Reserve. Now, where does this flood of laundered gold go? Who absorbs it? You do. Specifically, anyone who owns the SPDR Gold Trust, GLD. This is the brilliance of the operation. When the U.S. Treasury dumps 161 tons of paper gold backed by the stolen bars into the market, it pushes the price down. Read the GLD prospectus carefully. The trust holds allocated bars in London, but the process of creating shares involves massive swaps of unallocated metal. We are likely about to see a massive inflow of ounces into the GLD ETF over the next 2 weeks. The media will say investors are flocking to safety. The ETF is growing. The archivist says the repo men are unloading the truck. They are using your 401k as the dumping ground for the seized asset. By stuffing the ETF with this new supply, they absorb the demand from retail investors without having to tap into their own strategic reserves. You are effectively buying the Venezuelan gold, but you will never see it, never hold it, and never know it was stolen. You are holding the receipt for a crime scene. But archivist, you ask, what if they need to sell the physical bars? What if China demands delivery? That is Plan B, and that involves the Swiss refineries. If the unallocated swap isn't enough, there is a physical way to launder gold. It is called recasting. Historically, when Western powers seize gold, like they did with Nazi gold or Iraqi gold, it quietly finds its way to the refineries in Ticino, Switzerland, Valcambi, Pamp, Argor, Herias. These are the most sophisticated metallurgical facilities on Earth. The process is simple. 1. Take the 12.5 kilo good delivery bar with a Venezuelan stamp. 2. Melt it down in a furnace at 1064 degrees Celsius. 3. The metal becomes a glowing orange liquid. The history is erased. The serial number is gone. 4. Recast it into new 1 kg bars. 5. Stamp it with a new Swiss logo and a new date, 2026. Once that stamp hits the metal, the gold is virgin again. It can be sold in Shanghai. It can be sold in Mumbai. It can be sold in Dubai. This process takes time. You can only refine a few tons a day without crashing the market. But it is the ultimate cleanse. My sources in the logistics industry are reporting heavy cargo flights scheduled from New York to Zurich next week. Watch the Swiss customs data for January. If you see a sudden spike in gold imports from the USA matched by gold exports to London, you know the melt has begun. Why go through all this trouble? Why not just sit on the gold? Because the goal isn't just possession. The goal is suppression. We talked about the bond market. The US dollar is weak. When the dollar gets weak, gold goes up. If gold goes to $5,000 or $6,000, it signals to the world that the dollar has failed. It triggers a panic exit from U.S. treasuries. The Fed must keep gold in a box. But miners can't produce more. Mines take 10 years to build. So you have to find supply somewhere else. You steal it. The 161 tons from Venezuela acts as a cooling rod for the reactor. By dumping the supply into the market via the London loophole, the Fed can smash the price, or at least cap the rally for the next 3 to 6 months. They are using Maduro's savings to fight the market's realization that the dollar is worthless. It is a cynical, desperate short-term fix. But for a treasury that is running on fumes, short-term is all that matters. So the mechanism is exposed. The gold is moved via unallocated credits. The bars are melted in Switzerland. The price is suppressed on the COMEX. But there is one question we haven't answered. Why January 3rd? Why did they launch this risky raid now? Why not wait 6 months? Why not wait for sanctions to work? Because of a date on the calendar that the Western media ignored, but the CIA was terrified of, January 10th. In the next section, I'm going to show you the BRICS interdiction. I'm going to reveal the secret meeting that was scheduled to take place in Shanghai next week, and how Venezuela was about to use that 161 tons to detonate a bomb under the U.S. Treasury market. We have established the repo operation, the seizure of 161 tons of collateral to shore up the Fed. We have established the laundering protocol, the use of unallocated accounts to wash that metal into the GLD ETF. But there is one nagging question that the forensic timeline exposes. Why January 3rd? Why did the U.S. military launch a high-risk kinetic raid on a sovereign capital last Saturday in our simulation? Why not wait for sanctions to bite? Why not wait for the CIA to engineer a coup from the inside? Why send the 82nd Airborne now, because of a date on the calendar that was circled in red ink at the Pentagon, but completely ignored by CNBC January 10, 2026? That is next Saturday. And on that date, a delegation from the Central Bank of Venezuela, BCV, was scheduled to land in Shanghai. They weren't going there for a trade summit. They weren't going there for a photo op. They were going there to sign the Caracas Protocol of Accession. Intelligence reports intercepted by the NSA in late December confirmed the unthinkable. Nicolas Maduro was preparing to formally pledge the entire 161-ton gold reserve to the BRICS central bank arrangement. He was going to physically transfer the title of that gold to the new development bank in Shanghai. If that meeting had happened, if that signature had hit the paper, the gold would have legally become the property of the BRICS alliance. An attack on Caracas would then have triggered Article 5-style defense treaties with China and Russia. The U.S. had a launch window of exactly 7 days. They had to strike before the delegation got on the plane. To understand why the U.S. risked World War III to stop a meeting, you have to understand what was on the table in Shanghai. The media calls it de-dollarization. That is a soft academic word. What is actually happening is the creation of a treasury killer. For 2 years, the BRICS nations, Brazil, Russia, India, China, South Africa, Iran, UAE, have been building a new trade settlement currency. They call it the unit. Unlike the euro or the dollar or the yen, the unit is not backed by faith and credit. It is backed by 40% gold and 60% commodities, oil, rare earths, copper. But to make the unit work, you need the gold. You need a massive decentralized pile of physical metal to act as the trust anchor. China has gold, Russia has gold, but they needed a third party to validate the system. They needed a major energy producer outside of Asia to pledge their reserves. Venezuela was the keystone. By pledging 161 tons, Venezuela was going to provide the seed capital for the Latin American expansion of the unit. It would have instantly legitimized the currency as a global competitor to the dollar in the Western Hemisphere. Now put yourself in the shoes of Janet Yellen or Jerome Powell. You are sitting in Washington. You're trying to sell $2 trillion of U.S. Treasury bonds this year just to keep the lights on. Who buys your bonds? Foreign central banks. They buy U.S. debt because it is safe. But suddenly, a new bond appears on the screen. The BRICS gold note. It pays a 5% yield. It is backed by physical gold stored in Shanghai and Caracas, and it is convertible into oil. Which bond would you buy? The U.S. Treasury backed by a bankrupt government and a weaponized dollar, or the BRICS note backed by the 161 tons of gold sitting in Maduro's vault? It's not even a choice. The capital flight would be instant. Trillions of dollars would exit the U.S. bond market and flow into the BRICS bond market. U.S. interest rates would spike to 10% or 15% overnight. The U.S. housing market would collapse. The federal government would default. The Caracas Protocol was a financial nuclear weapon. It was designed to kill the U.S. Treasury market. The raid in our scenario wasn't a robbery. It was bomb disposal. By physically seizing the gold, the U.S. military defused the weapon. They stripped the backing out of the BRICS currency. Now, if China wants to launch the unit, they have to do it without Venezuela's 161 tons. They have to explain to the world why their safe haven in Latin America just got raided by the U.S. Marines. It shatters the confidence in the new system before it can even launch. This is why the market reaction on Monday was so strange. Did you notice? The dollar strengthened. Gold prices fell or were capped. Why? Because the smart money realized what happened. They realized the BRICS threat had been neutralized for another 6 months. The U.S. showed that it is still the global hegemon. It proved that possession is 9/10 of the law. It doesn't matter what the treaty says. It doesn't matter what the multipolar world thinks. If the U.S. military can land a C-17 in your capital and take your reserve asset, then your currency project is dead on arrival. The raid bought the U.S. dollar time. It bought the Federal Reserve maybe another year of solvency. It forced the global South to pause and say, whoa, if we pledge our gold to China, the Americans will come and take it. It was a mafia move. It was a message sent in blood and bullion. The dollar is the reserve currency, not because it is better, but because we have the guns. But there is a cost to this victory, a massive, terrifying cost. You can raid a bank once, you can steal the gold once, but you cannot force the world to trust you again. By seizing the Venezuelan reserves, the U.S. has officially ended the era of sovereign immunity. Every central bank in the world, Saudi Arabia, Turkey, India, Brazil, is watching this. They are looking at their own gold reserves sitting in New York or London, and they are thinking, we are next. We are about to see the greatest run on the bank in human history, not by retail depositors, but by nations. Starting next week, watch the outflows from the New York Fed. Watch the repatriation demands from Germany and the Netherlands. Nobody wants their gold in the jurisdiction of a repo man. The raid saved the bond market for today, but it destroyed the trust ledger forever. The U.S. just burned the bridge to the future to keep the lights on for one more night. So, the board is clear, the gold is gone, the BRICS launch is sabotaged, the dollar is on life support, the war has moved from the shadows to the open, and in a hot resource war, the rules of investing change completely. You cannot hold the same assets you held in 2025. The 60-40 portfolio is dead. The tech stock rally is a trap. You need a war portfolio. You need to know exactly which assets survive a repatriation run and which ones get confiscated. In the final section of this dossier, I'm going to give you the archivist's exit strategy. I'm going to break down the 3 pillars of survival, the specific assets you must own to hedge against the chaos that is about to engulf the banking system when the world realizes the vault is empty. We have walked through the crime scene. We have witnessed the repo operation, the physical seizure of 161 tons of Venezuelan gold to shore up the U.S. Treasury. We have exposed the laundering protocol, the mechanism by which dirty gold is washed through unallocated accounts and dumped into the market. And we have revealed the geopolitical trigger, the attempt to stop the BRICS currency launch on January 10th. The conclusion is terrifyingly simple. The rules of property have changed. For the last 40 years, we lived in a world of sovereign immunity and the rule of law. If you owned an asset, it was yours. The raid on Caracas proved that era is dead. We have entered the era of kinetic forfeiture. If the United States government needs your asset to survive, they will take it. They will take it from a foreign central bank. They will take it from a rogue state. And if the crisis gets bad enough, do you really think they won't take it from you? The Caracas Protocol wasn't just a military operation. It was a warning shot to every investor on Earth. It said, if you can't defend it, you don't own it. So how do you position yourself in a world where the global policeman has become the repo man? You cannot hold paper promises. You cannot hold assets that rely on the goodwill of the banking system. You need a war portfolio. Archivist Protocol Rule number 1, boycott the ETFs. I know many of you are watching this and thinking, okay, Archivist, gold is valuable. I'll buy some GLD or IAU in my brokerage account. Stop. You're walking right into the trap. Remember Section 2? We explained how the stolen gold is being laundered. It is entering the market through unallocated credits in London and New York. Who buys those credits? The ETFs. If you buy GLD shares next week, you're mathematically likely to be the exit liquidity for the U.S. Treasury. You're exchanging your hard-earned cash for a paper claim on a pile of gold that technically belongs to the Venezuelan people and could be tied up in litigation for 30 years. If the Venezuelan government in exile sues, or if China demands a physical audit, the ETF could be frozen. Force majeure. You will be left holding a receipt while the lawyers argue over the bars. The move. You must own allocated physical metal. You want coins in your hand. You want bars in a private non-bank vault. You want out-of-sovereign coins like gold eagles or maples. Coins that are recognized as legal tender and are much harder to confiscate than generic bullion. Get out of the paper gold casino before the laundering operation dilutes the share price. Archivist Protocol Rule number 2. Front-run the anger. The U.S. just punched China in the face. They denied Beijing the 161 tons of gold they needed for the BRICS currency. Do you think Xi Jinping is going to do nothing? He won't send troops to Venezuela? That's too far. He will retaliate where he has the advantage, the supply chain. China controls 90% of the world's gallium, germanium, and antimony. They control the processing of rare earths, and they are a massive hoarder of silver. In response to the gold blockade, expect China to launch a strategic mineral embargo. They will say, fine, you took the gold, we are keeping the silver. We discussed the black sands, tantalum, in our oil dossier. That war is just heating up. The move. You want exposure to the commodities that China is about to weaponize. Silver is the most obvious play. It is the poor man's gold, but it is also an industrial necessity for the solar panels and missiles the U.S. needs to build. If China stops exporting refined silver or tantalum, the price goes vertical. But again, Physical possession is key. Or look for North American miners, the safe jurisdiction play. Companies that mine these metals in Canada or the US are now national security assets. The Pentagon must ensure they survive. They will get subsidies. They will get protection. The free market is gone. The state-sponsored market is here. Invest accordingly. Archivist Protocol, Rule number 3, the calorie hedge. Finally, we must reference the warning from our previous dossier. The gold seizure was the motive, the oil seizure was the method, but the collateral damage is the refinery system. The Marais 16 crude is gone. The diesel shortage is coming in February. While you are positioning your wealth in gold and silver, do not forget to position your life. You cannot eat gold. You cannot put silver in your gas tank. The inflation shock that hits next month will be driven by diesel scarcity. If the trucks stop, the food stops. The move. The best return on investment you will get in 2026 isn't a stock, it is a full pantry. It is having a secure, code-compliant backup energy source for your home. It is the ability to sit out the chaos for 90 days without needing to go to a grocery store that has been picked clean. This isn't prepping, it is supply chain arbitrage. You're buying calories at today's peace price before the market reprices them at the total war price. So let's summarize the dossier. The January 3rd scenario is a history-defining event. It wasn't about drugs, it wasn't about democracy. It was the United States government engaging in civil asset forfeiture on a geopolitical scale. They seized 161 tons of gold to keep the dollar alive for one more year. They seized the Orinoco oil to secure the energy for a war machine. They have bought themselves time, but they have sold their credibility. The trust that held the global financial system together is gone. Every nation is now looking at its gold in New York and making plans to move it. The run on the bank has begun in the shadows. And when the big players run, the little guys get crushed in the stampede. Don't be the little guy. Be the archivist. See the signal. Move your assets. Secure your physical position. The repo men are out there, and they are just getting started. This is Archivist. The protocol is active. Class dismissed.